Hi, it's Harry. Well, we're one third of the way through March, and there have been a lot of conditions affecting uh, the global economy, let alone Canada and let alone Calgary. We've seen quickly the rise in oil pricing, which will have a negative effect on most production goods because all of a sudden the cost of energy has gone up. It's not as if we can basically replace it with any source. It's almost inelastic in economic terms, where we'll accept whatever price. We have already seen prices go up at least 20, 30 cents now on normal gasoline. And this will go through all our various food pricing and good pricing, which will have a negative effect on our economy because when your costs go up, you either increase the price of a product or you accept a lesser margin. And the answer may be somewhere in between if this keeps continuing onward. The idea that the Iran Israeli slash US conflict will be over quickly, I think, is optimistic. I suspect it won't be a multi-year war like I think the Ukraine would be, but it will last several months. I guess it helps the Alberta economy from the respect that now we've got more royalties to pay for some of the projects that we plan, either in the schooling or other projects across Alberta. But if you're not in the oil industry, you're not doing as well, and that's going to have a negative effect on the economy. And what that results in, and it will be inflationary because the cost structures will go up. And this means if it's inflationary, I'm not expecting um, a drop in the Bank of Canada rate or mortgage rates for at least a year now. In fact, there's even some people saying it might go up. They might bump up the interest rates with the belief that if it gets too inflationary, they'll have to calm the price increases with increasing interest rates, which is antithesis to our current GDP situation with our trade wars that are going through, that we haven't really seen the true impact, and we won't see it till the summer when the true negotiations begin. I'm not a liberal, but I like the policies that are being moved forward where we are trying to form agreements with other nations in the world. We have to start becoming decoupled from the US as much as we can. Not complete decoupling, but we can't just depend on one. It's like putting all your eggs in one basket. All all portfolio managers and every investor say don't do that, and it's amazing how we decided to do that, and we thought this would work out well, and well, we're finding out it doesn't work out well. So what does that mean for the Calgary market? It has muted the Calgary market. Although we are a balanced market, the only where we should be actually a seller's market, what I've seen is that the sales aren't there. It's not as if the inventory has really skyrocketed. It's more that the buyers don't come back because people are nervous about their financial situation. And as soon as you have uncertainty in long term economic issues and even short term, people put the brakes on large expenditures. And we're starting to see this uh, definitely in the housing real estate industry. And obviously the stopping of immigration policies that we needed to do as Canada, because it was putting heavy pressures on our social services and medical services. There's always a lag when you bring in immigrants, which is not a bad thing, but it takes time, and you have to put in the infrastructure for it. And unfortunately, we did not. And we're seeing the effects of that as people are clamoring, trying to get doctors or trying to find financial services and wondering why there's always a long lineup. The decisions we make have impact, And obviously the decision of not monitoring our water system properly has an impact, because now we've got to replace a water system, and there's going to be a property price tax hit on that. There's got to be. And funny how you see the newspapers, whether it be the Sun or Herald, and everyone's pointing fingers at each other. But I would say, the last few administrations, I won't blame Gondik's thing because she inherited it, but the administrations before, they had a chance to fix it. At the end of the day, your oversight. We paid you six-figure salaries to provide oversight, and that didn't happen. And funny how nothing really happened to the folks that were put in charge of the oversight. Because in the private industry, I can tell you what would happen to most folks if this kind of fiasco took place. Let's say you wouldn't be working. But if you are financially stable, where you are not buffeted by these economic forces, or you have enough stable positions where that occurs, it actually creates a buying opportunity, a very good one for a buyer. Not to say things won't get worse, because about 50 to 60% from what I've been told of mortgages, pre-COVID mortgages, are coming due in the next few months, which means although if you had paid down your mortgage by these amounts, by the regulated amounts or agreed upon amounts, you will still see a 15% bump in your mortgage payments once the new interest rates get rolled in. Because if you go from 2 to 4.5, even with the pay down over the last 5 years, you're going to see a bump. And if you don't see, you haven't seen any pay increases in the short term, you are going to feel it. We will see an erosion of disposable income, and hopefully people haven't bought to their limit, because if you haven't seen an increase and all of a sudden you're having to pay 15% more and you don't have funds left for a rainy day, it's not a very good news situation. I don't expect it to be that significant, but it's there. It will have an impact. So I think both that and our current conflicts and the trade issues have created a muted spring market. The spring market is there for choice properties. I've faced competition, competitive bidding on houses, just because there are folks there that can afford it. They're in a financial stable condition that this can actually be done. So it's not always the case where you won't face non-competition right now, although it's balanced. For properties that have something that have value, you will face competition. What do I expect for the selling side? I would suggest sell now, because there are forces out there that actually could be detrimental to you. If things, we have a reasonable end to this trade war, or mitigation of the trade war, and this Iran conflict gets mediated out, we will probably see prices not fall. But if we see adverse economic effects, I won't say we'll head into a recession, but there will be a downturn in our economy, not to our liking. So, and that typically puts downward pressure on pricing, if anything. Where if you're a builder, you're in a hard world, because the cost structure is now going up, and you can't transfer it. Because what we've seen in the last year over year is that prices have basically stable. There might be a 1-2% inflationary increase, but not more than that. And you have to be able to control your costs to make that the case. And quite frankly, I think our condo market, where definitely the apartment side, but the row townhome market as well, it's overbuilt right now because our net migration has fallen, which means there's downward pressure on the pricing. We've seen some up, 1-2% increase because the builders sell anything less, they're not making their profit margin that they need to survive. So we're having some of those effects, and they're gonna continue. Anecdotally, I've heard from various realtors that some people that they're aware of that have bought into these pre-sale condos are now underwater, very much like what happened in Toronto, but to a lesser degree. So that doesn't bode well for the market. So if you're a buyer, still a good time to buy. You might be able to get things less. If things solve out, you might not, but still a good time to buy if you're financially stable. If you're a seller, to mitigate your potential risks, sell now. Don't wait. Hopefully this has been helpful. I try to talk about real estate topics and influences on it weekly. Please reach out if you have any questions or if you need any help on services. Again, please reach out. It's been an interesting time. We've had a lot of things buffeting the Canadian economy and the Calgary economy. So we're staying our course. And like I indicated earlier, where I predicted the beginning of last year that we'd be flat, and funny how we were pretty much flat. I thought I was smoking something, and that wasn't the case. And I think we'll be flat this year as well, maybe up. But I initially thought we'd be up 1 or 2%, but with some of these negative scenarios of higher cost structures, I think we'd be happy to be flat. So hopefully this is helpful. Hope to hear from you. Otherwise, have a great night. Bye now. Yeah, I'm in my dungarees as we go through this water crisis. So unless I'm traveling out to meet folks, I tend to be more informal than formal.